Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. We are going to be talking about the Federal Reserve 12/17 options expiration and why I think there's going to be an enormous, outrageous, call your grandma type of bull market in small caps over the next month. I have facts to back up these claims. I'm not just saying this, oh, we're going to the moon. I have legitimate facts, evidence, historical proof to back up my claims, and I'm going to be showing you guys data and all of that good stuff and jazz. So you guys, give me that like on the video. I know I deserve it. I'm gonna make you guys all rich. Let's go. Anyways, this is all jokes, not financial advice, satire. If you follow my advice, you're probably gonna end up poor. Alright, that's just being plain and honest for you guys. Anyways, drop a like on the video. Let's get right into it. I'm just joking with you guys. So first things first, we have to look at the S&P 500 because you guys can see there was a massive push yesterday because of the Federal Reserve. Now this is important because things are looking a bit more bullish because the Fed was able to confirm what everyone was expecting, which meant more tapering and higher interest rates sooner. Now, what was very, very bullish about the Fed is that they are going to be tapering, obviously, but they're not going to be raising interest rates until after the taper is complete. Powell said himself he does not want to upset markets. Daddy J. Powell cares about us, doesn't want us to go poor. Perfect. All right. Now, the SPY. It's sitting close to an all-time high. In fact, it actually did hit an all-time high as of this morning. So the SPY is not going to be where you can necessarily get some degenerate gains. Now, it's coming down here right now, but that's besides the point of the video. If we're looking at something like the Russell 2000 right here, this is sitting at 217 bucks. Back in February and March, this was much higher right here at 230, reaching a high of 233. So Russell 2000 has gotten absolutely beaten up, and it hasn't really done anything over the past year. It's gone pretty flat, and this is all because of interest rates, Federal Reserve, FUD, small caps already going up a ton in 2020. All of that nonsense and jazz. Now, Russell 2000 is also set up technically beautiful on the market cipher. It's sitting at a support level. So overall, based on technicals, I think IWM or Russell 2000 is a fantastic buy right now. Not financial advice. Looking at the technicals right here, we got the big blue wave compounded by the smaller blue wave. Smaller blue wave just got a green dot as of today. VWAP is also crossing over. So right here as of today is almost the perfect entry in to something like Russell 2000, and I have even more juice to go along with this claim. Now, we are going to be talking about the 12/17 options expiration. Now, what is important about the 12/17 option expiration is it is the largest options expiration date of the entire year. In fact, $4.3 trillion, that's with a T, trillion, of equity options are expiring, including 8% of the Russell 3000's market cap. It's an absolutely insane expiration date. If we look at history, the December expiration date for option every year is pretty insane. Now, this is combined with the fact that there is a quad witching tomorrow, meaning that 4 different derivative securities, I believe it is options, futures, credit default swaps, and I'm forgetting the 4th one, they're all expiring as of tomorrow. So there should be enormous amounts of volatility. Also, we're trading closer to the money right now for these options. If we scroll down here real quick, you guys can see majority of the calls and puts are close to at the money. I believe we are right at 468 right now, so we would be right here on this chart. But again, most of these options are at the money, which also would add elevated volatility and the most amount of put options all year. Again, guys, so December is very important in terms of volatility because there's also stuff like tax loss harvesting and other unnatural aspects that affect the market's value. Now, this is also creating a massive negative gamma because there is a large put volume, right? If we see right here, very large put volumes. So this negative gamma kind of works Opposite to positive gamma. If you've seen my videos on gamma squeezes in the past, if there's a ton of call option volume and a ton of options that are going in the money, it creates a feedback loop where there's just buying and buying and buying, and stocks tend to go up insane amounts during gamma squeezes. The same thing happens when there is negative put exposure, and that's exactly what's happening on 12/17. There are tons of equities and options that are having a negative gamma right now and getting a put gamma squeeze, AMC included, and GameStop. So when we're looking at all of these things, we have to look at the things that are getting beat up the most, and that's where we could find the most amount of the most cash flow to us. Because think about it, when there's a gamma squeeze, typically the following Monday, the next week, it falls down. We saw it with Progenity on 11/19. There was an insane gamma squeeze. It went up over 100% within that week. It was awesome. We were calling up our grandma before she lost all her life savings, right? And she was like, hey, we rich, we got that Wen Lambo, baby. but the same thing happens with a put negative gamma squeeze, because right now things are being driven down, not because people are selling, but people are buying a bunch of puts. Now what happens when 12/17 expires next Monday? This should be reversed. Now if you think about it, call options are hedged by buying longs, right? By buying the underlying stock. That's how you hedge a call option if you sell it. If you are selling a put option, you have to hedge with short positions. So after 12/17, to unwind the hedging, people, market makers, and people just selling these put options are going to end up closing a lot of the short positions that are used to hedge, which could create a violent recovery in a lot of these stocks, especially in small cap stocks. Because like I showed you guys, small caps are the ones that are being bet on the most bearishly like right now. If we're looking at Russell 2000, again, it is the worst performing index. If we look at QQQ, if we look at SPY, Russell 2000 is the worst performing one, and it has the most put options expiring tomorrow on it. If we look at SPY's, I mean, it hit an all-time high this morning, right? So I'm not too concerned about SPY, but I'm looking at things like IWM, AMC, GME, and just all of these stocks that have a ton of put options expiring. And right here, you guys can see a chart of 2018. There was a bear market going into Christmas, and options expiration was on the 22nd of December, it looks like. And you saw this huge sell-off going into options expiration. And then after options expiration, there was one more red day. Then the markets violently recovered into the green. So, since the current positioning in the market is very negative and heavily tied to the 12/17 expiration, either a bullish Fed, which we got by the way, or options expiration could trigger a violent rally that is purely a function of put positions unwinding. So that is exactly where my thesis is coming. So I think stocks like AMC, which has a massive negative gamma ramp right now, by the way, I posted this on Twitter at HootmoneyYT. You need to follow me. I post very valuable information on Twitter every single day. You guys can see the massive negative gamma ramp through the put options on AMC stock. If it gets under 20, that's 31,000 put options that will be in the money on AMC, all expiring on December 17th, which is tomorrow, meaning that there is enormous downward pressure on AMC that's not really being caused by people just selling the stock, right? Maybe stop losses are being hit, but most of the downward pressure on AMC is being caused by a put gamma squeeze, a negative gamma squeeze, right? And if we look at some of these flows right here, like here on AMC, you guys can see a very bearish flow over the past week. This is the whale flow, 75% bearish. We can look at something like IWM as well. I believe that, yes, IWM Russell 2000 right here. Again, very bearish, about 68.5% bearish. GameStop as well. GameStop was also very bearish, 68%, or 69%, baby, 69% bearish this past week. A bunch of these are having these negative gamma squeezes right now, which is making the stock price tank, even though people aren't necessarily selling, just because a lot of people are in fact buying put options. Now these put options has to be hedged with short positions, and once they expire on 12/17, whatever is being hedged whatever short position is being used to be hedged is going to get bought back because the market makers have no more need to have a short position. It just creates risk that they don't need. So the safest way to play this reversal in the market, in my opinion, would be through just buying the Russell 2000. You can also look at any stock that has been absolutely beaten up over the past month. It should be a decently solid bet, but I recommend checking out the Unusual Whales flow, making sure it is a very bearish flow first, and confirming that. You can check out Unusual Whales with the link in the description. Use code Hootmoney at checkout if you decide to go on with it, but they also have a free version as well. Tons of free features on Unusual Whales, so check that out all as well. Another way that you can do this for free would be essentially just going to the option chain on Webull, going to the puts and looking to see if there is a massive gamma ramp by looking at the out of the money open interest on the stock. As you guys can see, there's a massive gamma ramp in IWM right here, negative gamma ramp because it's with puts. So finding stocks that have this in their open interest, they could get a violent reversal going in to the end of the year. Another sleeper pick you guys can have is cryptocurrency because it's been beaten up over the past month. Now, it has nothing to do with stock options expiration on 12/17 given, but its sell-off was kind of correlated with the S&P 500 and the IWM, the Russell 2000 sell-off in the past month, and it also got a bullish bounce because of the Federal Reserve. So I do think cryptocurrency would also likely benefit over the next month. Now, none of this is financial advice. Understand that. Do your own research. This is just what I have personally found, and this is my own personal thesis. So please, 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 please do your own research before getting into any of this. It could get real risky real quick. But that's all I really got for you guys. I hope you guys have enjoyed. If you guys wanted to check out Moomoo, they're having their Christmas promotion through, I believe, the end of the year, through the new year. So you can get an Oculus Quest 2, iPhone 13 Pros, shares of GoPro. You get it right here. You can see how exactly to grab it. This is on top of their amazing brokerage promotion already, where you can get up to $7,000 in free stock as long as you deposit $1 on their platform. There's a link below in the description if you guys wanted to check out Moomoo. Also in the pinned comment section. It's the best brokerage promotion right now. And again, make an account, deposit $1, get up to $7,000 in free stock. Anyways, guys, that's about it for the video. Hope you guys have enjoyed. As always, drop a like if you guys did. Remember, the safest way to play something like this would be through the Russell 2000 index. If you're looking at individual stocks, it gets increasingly more risky. Just understand the risks going into this. If you're deciding to play this through options, it becomes more risky than shares. And yeah, guys, I do think that 12/17 is going to be an insane expiration date. All of my conviction has led me to believe that we should be bottoming out very, very soon. We use historical evidence. We found stocks that have a massive negative gamma exposure right now. So I'm fairly confident that after these options do expire, there should be a ton of buying back of short positions, right, that are being used as a hedge for selling these put options. And I do think we rally. Up until 12/17, up until tomorrow, it is still dicey because there are a ton of put options expiring, meaning that there's probably a bit more downward pressure, even though there was a bullish Fed. But after 12/17, it should be getting very, very juicy, and that's exactly why I'm making this video. It differs from my normal typical analysis, but I hope you guys have enjoyed it. If you guys did, drop a like on the video. Always highly appreciated. It's the #1 thing you guys can do to help me out here on this channel. Subscribe for more content and hit that post notification bell down below. I will not be having a live stream tomorrow, unfortunately. I'm going to try to update you guys with some YouTube shorts if I can, so look out for that as well. Thank you guys again for watching. Drop a like. Check out Moomoo if you guys have not already. If you want up to $7,000 in free stock, as long as you deposit $1 on their platform. Again, guys, have a wonderful day. And if I don't see you this weekend, have a wonderful weekend. See you guys later. Peace.